Hey everybody, good morning. It is the 27th of September 2022. It's almost 8 o'clock in the morning here where I'm at. It's about 7:48 a.m. What I want to do is I want to take a look at the Dow Jones because that is just the next index in the stock market to reach what some analysts refer to as bear market status. I want to talk a little bit about what I think that means and how I plan to attack that. But before I get into all of this, as you all know, this is not financial advice. I'm not your financial advisor. You're responsible for your own trades, manage your own risk, doing your own research, and I'm just giving my opinion on the market. Okay, well, let's go ahead and take a look at the chart here. So this is the Dow Jones, and as you can see, we closed yesterday at a low for the year, the lowest close that we've had so far this year. But what I will say is, this is basically a drop of about 20% from the top. That's what some analysts refer to as what constitutes a bear market. Now, I want to take a little bit of a comparison to the S&P 500 and NASDAQ. So the S&P 500 has already dropped 23%. NASDAQ has already dropped like 32%. So Dow Jones is just the next nail in the coffin. But what does that actually mean? All right, so first off, let's just go ahead and take a look at NASDAQ for just a moment. And I want to point something out. All right, so what we have here, from the top to the bottom here, there was a 22% drop right there, okay? From the top here, this was about Thanksgiving week of 2021 to the bottom here. So we hit that 22% mark here, and this was in February 25th. What ended up happening after it got into that quote official bear market? Well, it actually went ahead and staged quite a bit of a rally up, right? So we had a move here from about 13,000 all the way up here to about 15,200. That was a significant rally. And then what ended up happening from this point, we saw it dropped, another 27%. But then what ended up happening from this bottom right here, it rallied about 23%. Let's just go ahead and take a look and see how high it rallied from this low to this high. That was about another 16% jump. So I talk about this all the time. If you've been paying any attention to me over the last several months, because this is not something new, I always say that typically the people that lose money in bear markets are bears because of these rallies. Some people, if you're interested in Wyckoff, some people refer to these as automatic rallies, right? And this is, my opinion, an automatic rally here, and right here, another automatic rally here. And then what you're looking for from that point is, okay, well, where's it going to reject? And as a bear market trader, I always talk about myself being a corrective trader. This is the kind of thing that I'm looking for. I'm looking for pullbacks. So let's go back here to Dow Jones. And I've got the daily chart up here. Couple things that I want to point out before I get into the Fibonacci pull that I've got on here. You've got on our Wave Master on the daily, you've got the yellow, the white, and the red wave still moving strongly downward. Now, the daily, the green wave, is pretty much oversold right now. So there is a little bit of an indication that we may be seeing a bottom here in the very near future. The bottom may be in. We really don't know. But the fact of the matter is, the fact that news outlets are going to start talking about this, this is just case in point, right? The fact that news outlets are going to start talking about this means it is too late to really take action on it. It's a hindsight statistic, okay? The market's already dropped 20%. So what's the probability that it's just going to continue falling from here another 5, 10, 15, 20%? Probability is pretty low. And what ends up happening is a trader or retail will see that headline. They'll see we are in a bear market. And what will they do? They'll go into their 401k. They'll move it to cash. They'll go into their trading account. They'll buy puts. They don't know what they're doing. And what they're doing is creating liquidity for people that have a lot of money, that they need that liquidity in order to buy things back cheaper. in order to create this automatic rally. Are we going to get an automatic rally from here? Well, let's just take a look. All right, first off, I'm going to zoom in a little bit here. And again, I usually don't look at the Dow Jones, but I'm going to do that today. So what I'm going to do is I'm going to take a fib pull from this top up here. I'm going to go down here to this low, okay? And what ended up happening here, we had some resistance at the 618. It did poke through, but it didn't last more than a day above that 65. So we call this our golden zone between the 618 and the 65. What's the target for this? You know, you've got a target of the 236 extension, and then you should also pay attention to the 382. But what ended up happening? We had that target that was hit right there. It was perfect. And then further, it went down here to this 382. Again, a sign of weakness. When it goes past that 236 extension, that is a significant sign of weakness. There's a sign of weakness here. All right, so then what ended up happening? Well, we went even lower. And let's just go ahead and move this fib pull down from the all-time high to this low right here. Again, we came all the way back here to the golden zone. And where's our target? All right, our target, let me zoom back out. Our target just happens to be here at about 28,150, which happens to be very, very close to this 382. So this area right here, more than likely, is going to be where the low is going to be in. Now, how far down is that from where we're at right now, or at least where we closed yesterday? Because I think we're going to get a little bit of a gap up. We're only talking about maybe a 3.5 to 4% drop from where we're at right now. Now, the market's already dropped 20%. Is it worth it to risk any amount of money that's worth its weight to go short here to capture a 3.5% move when it's already dropped 20%? I wouldn't risk a whole lot, because let's just go ahead and zoom out a little bit more. What do we have right here where we closed? What I'm going to do is I'm going to pull this guy right here, and we're going to get to this low right here. So what I'm doing is I'm pulling from this high right here, and this was the pre-COVID high, February 12th. And then I'm going to go all the way over here to this November 12th of 2020. This low, creating a little bit of a box here. We're right smack dab in the middle of it right now. Okay, zooming in, we are right in the middle of that box right now. So let me go down to a lower time frame. I'm going to go down to an hourly, because this is what I like to use for the Wave Master, on for a trade that's going to last 1 or 2 weeks. All right, fact of the matter is, we're down here right now, and we've got the green, the yellow, and the red wave all in oversold right now. The white wave, which is our weekly, is still moving down strongly. So the trend is down. Are we going to get a bounce? I believe we're probably going to get a bounce. And I don't know if it's going to happen this week or next week, but we're going to get a pretty significant bounce. And that's what takes bears by surprise. They're not prepared for it. They don't know how to handle that trade, and therefore they end up losing. And I'm actually really looking, and if you're on our Discord, we were talking about this yesterday. We actually took a short scalp yesterday at 10:23 in the morning. We went short. We closed that short at 2:02 p.m. when I saw some signs of strength, and we've moved up all the way back to where we got that short initially. And that's how you have to trade when you're down here. You have to look for signs of strength, because in a bear market, when you've already dropped 20%, fact of the matter is, more than likely we're going to see bounces. And the bounces are going to be pretty strong, pretty significant. So with the fact that we've hit this 618, I do believe we're going to realize this target down here, which is going to be at about 28,200, 28,150, somewhere inside of this lower purple box. More than likely is where we're going to find that support, and I would be looking on the lower time frames to confirm when that bounce is going to occur. I'm not going to go down lower than a 1 hour here in this video, but just to give you just some food for thought, I do go to much lower time frames when I'm looking for that support, because you're going to find that significant support on the lowest time frames first. because they move faster. It takes a whole hour for a new candle to be painted on an hourly chart, whereas if you're looking at a 5-minute chart, you get basically, what is it? You get a lot more candles. Every 5 minutes, you get a new candle if you're on a 5-minute chart, versus the hourly. It takes a whole hour for a new candle to be created. So it moves a lot faster, and that's where I look for that support before we start to see a bigger pivot. But as of right now, this is what it looks like to me. I do want to point out one more thing, and this is actually pretty important, so I hope you guys are still sticking along here. I'm going to go back to the daily, and I'm going to zoom back. We're going to go for a little history lesson here. All right, so we're going to ignore the COVID crash because that's a little bit of an anomaly. What we're going to look at is 2018. We're starting here in October of 2018. We're going all the way back here to basically Christmas Eve. I still remember Christmas Eve. This was the bloodbath, and the news outlets were just frothing over this bear market. All right, what ended up happening? Well, we went from this high right here to this low right here, and it was 19%, not even 20%. And you had news outlets saying we are very close to a bear market and things are going to be very, very bad. Things had already been very, very bad. Fact of the matter is, the news outlets, when they start talking about things, it is too late to take action on that, at least for their narrative. Now, what was true back then at this low? Well, first off, it was the low. We kind of spiked down a little bit the next day, the day after Christmas, but we basically rallied from there. Now, is this going to be different? Is it going to be any different today? We're just going to have to wait and see. But the point that I'm trying to make here is the news outlets are talking about bear market. We've hit this technical indication that we've hit a bear market, which means we've dropped 20%. And therefore, we're basically saying that the trend is down. But as we just saw in 2018, that wasn't true. I'm going to continue to trade shorter term based on what I see on the chart. I do think that Dow Jones is going to see a move down here to the 382, and that 382 is from the COVID low to the high back here in January. It does look like we're going to find some support here in this area from what I've outlined already. So, is it possible we see a bounce here? Yeah, it sure is. And more than likely, what's going to end up happening is you're going to have people buying puts, and you're going to have people buying calls, because you're going to have a lot of people saying that, it's a bear market, so we're at the bottom. So we're going to move up like we did in 2018. The chart does not look the same way today that it did in 2018. So chances are pretty good we're going to see something a little bit like this. Up here, find some support, right around here. Then we're going to go back here. Then we're going to go up here. And then we're going to go down. Maybe we go down here into the new year, right? So this is just kind of an example. But what this is going to do, this is going to kill both calls and puts. You've got a ton of money in puts right now. Retail is loading up on puts, and you're going to have the retail that's also going to be loading up on calls right now too, thinking that we're going to get a bounce. A lot of people are saying this is the bottom. Don't try and catch a falling knife if you don't know what you're doing. More than likely, this is what we're going to see over the next maybe month, and then we'll see what happens from there. I don't think the bottom is in, but I don't think we're going to go to straight all the way down here to 28,200, over the next couple days. We're just going to have to wait and see. I still have a target of about 3575 to 3600 on the S&P. My target is 28,200 on Dow Jones. Although I don't trade Dow Jones, that would be a technical target for me. And I've got my thoughts on NASDAQ, but I'm not going to get into that here. I wanted to focus on Dow Jones and the fact that you have to be really careful listening to the news, because news is a very lagging indicator, right? For a really good example, when the Twin Towers were hit, you heard about it after it already happened. It would be really great if somebody would have, told us about that before it happened, but that's impossible. You really can't say what's going to happen next. It just kind of unfolds. And the same thing is true in the financial sector, in the financial markets. I believe we're going to see 28,200. I don't know that for sure. I have technical indicators that help me make an educated decision that that's where we're going to go. But we're just going to have to wait and see what the market decides it wants to do. Are we going to get a bounce here? It looks like we probably are going to get a little bit of a bounce, a little bit of a ping pong effect before we move lower, and we'll just kind of go from there. All right, guys. That's all that I've got for you today. If this helped you in any way, shape, or form, you know the deal. Like, subscribe, share. If you're not a subscriber to our Discord, you're not a member of our Discord, we do have a newsletter that we send out every other week. Go to BitDoctor.org, and at the bottom of the page, there's an area for you to sign up for our free newsletter. It'll give you some information on where we think the market is going to be going over the next week or two. So we'd love to have you as part of that newsletter as well. And of course, if you do want access to our Discord, if you're not part of our trading community, you can find all of that information on BitDoctor.org as well. Feel free to reach out to me on Twitter or Discord if you have any questions. And I'm going to go ahead and let you go. So last but not least, wherever you are in the world, hope you're having a good day, good night, and a good evening. Take care, everyone.